Welcome back. In this video, I am going to cover the various options to execute your trade. I'll be doing this using the software I use. This software is provided by my broker, Zerodha. I'll cover the options provided by my broker. Now, of course, your broker may provide slightly different options or similar options that go by different names. But once you go through this video, I feel you will get a good understanding of how you would like to execute trades with your broker. So let's get started. This is basically my market screen. Here where I have all those securities that I'm currently tracking. Now here are the different order types that my broker provides. First is a simple buy order, a simple sell order, then I have the bracket order and the cover order. So these are the basic options that my broker provides me to execute trades. We will look at them one by one. I of course assume that you know what is a market order, what is a limit order, or what is a stop loss order. I'm not going to get into that basic stuff here. I'm going to just cover these various options that I have to execute my trades. So let's start with the simple buy order. In case of a simple buy order, you just select the exchange, the product type, select the symbol of the security. In this case, it is Sun Pharma. Because I have selected this on my market screen here, you mention the order type. It may be a limit order, a market order, a stop loss order, or a stop loss market order. Now I assume you know these basic order types. Then you mention the quantity. Let's say I want to buy 100 shares of Sun Pharma, and I basically enter the price. Let's say I want to buy these 100 shares at 520. So you can just press this submit, and if the market is such that you can buy 100 shares at 520, then your order will be executed. This is a simple buy order. Similarly, you have a simple sell order. Again, in this case, what you need to do is basically select your exchange, select your product type, then you select the security name, select the order type. Let's say you select market. Maybe you now want to sell at market price. Select the quantity. Since this is a market order, you will obviously not enter the price because the order will be executed at the current market price. Now you can just press submit and your order will be executed. So this was simple buy and sell order. Now let's look at a different order type, which is one step forward from the simple way of execution. Now let's look at the cover buy order. The cover buy order takes you one step forward. Again, you will see you have similar options here. You can select the exchange, you can select the security type, and you can select the symbol. You can make this order a limit order or market order. You can mention the quantity. Let's say you want to buy 100 shares and you want to buy at 520. So far it is as simple as in the case of a simple buy order, but in case of cover order, the broker has provided me an option to specify my stop loss price also. So for example, say I want to execute a trade where I want to buy at 520 and I want to get out of this trade in case it goes against me by say 5 points. So let's say I want to get out of this trade at 515. So I can just mention 515 and this will basically instruct my broker to get me out of the trade if the prices fall to 515. Similarly, you have the cover sell order. Basically here too you will mention the exchange, the security type, the symbol, whether you want to place a limit order or market order. You select the quantity, the price, and again you can basically place your stop loss price. Let's say you want to sell these shares at 520. Maybe you want to place a stop loss at 525, and so this will instruct the broker to get you out of the trade if the prices go against you to 525. The advantage of cover order is that it immediately protects you in case the prices go against you. So right at the moment you enter the trade, you also place your stop loss. So this will basically make sure that you get out of the trade if there is adverse development and it goes against you. However, if the prices go in your favor, then you have to manually book your profits because this option type basically does not allow you to mention a target price in this order. So this is where bracket order comes in handy. So now what we are going to do is look at the next order type, which is the bracket order. Here is the bracket order buy. Again, you see these are similar fields. You select the exchange, select the security type, select the symbol of the security, you select the quantity. Let's say you want to buy 100 shares of Sun Pharma, and let's say you want to do so at price of 520. Now let's say you enter a trade where you go long 100 shares of Sun Pharma at 520 and you want to book your profits if the prices hit 525, and say you want to book a loss if the prices hit 515. So let's see how we can execute this order using the options we have here. This square of cell option here is used to basically mention your target price. In this case, you don't directly mention the target price. Basically, you won't write 525. No, instead you need to write 5 here. That is, you need to mention the number of points your target price is away from your entry price, and the system will automatically calculate your target price. So once you mention 5 here, this tells the broker that your target price is 5 points away from the entry price. Similarly, once you mention 5 here, it will tell the system that your stop loss price is 5 points away from entry price. Now instead of mentioning the absolute number of points, you also have the option to mention the number of ticks. So instead of 5 points, you can mention 100 ticks. Similarly, instead of placing a stop loss sell order and mention 5 points, you may mention 100 ticks. This again will tell the broker that basically the price at which you want to exit your trade if it goes against you is 100 ticks. So this will again come to 515. So basically your broker will know that you want to exit the trade if the prices go 100 ticks in your favor. So again your exit price will be 525. Now I find it easier for me to just directly enter the number of points, where basically I don't want to do the math of multiplying the number of points to the number of ticks. So I usually directly enter the number of points here. So in case of target price, I write 5 points here, and again in case of stop loss also, I place 5 points here. Now apart from this, there is another parameter that you can select for your stop loss and take profit price. This parameter is shown as LTP and ATP here. If you mention LTP, what happens is once your stop loss price is hit, then your broker will get you out of your trade at the best possible price. So for example, in this case, the stop loss is 515. So the broker will get me out of the trade once the stop loss is triggered. So let's say if prices go to 514 suddenly, then the broker will still get me out at 514 if it is not able to get me fills at 515. If you choose the ATP option, the broker will place an order to get you out of your trade at 515. So what happens is, if you have a fast move and prices move to 513, then your exit order will still be placed at 515 and your position will still be open. As you know, this can be very risky, which is why I prefer to use LTP and not ATP. So this is how you can place a buy bracket order. Now what will happen is, once you enter a trade, you automatically instruct the broker to book a profit at price mentioned by you, or book a loss at the stop loss mentioned by you. And once your stop loss price or take profit price is hit, the broker will cancel the other order. So basically, if your stop loss price is hit, then your take profit order will automatically be cancelled. Similarly, if your take profit price is hit, then your profit will be booked and your stop loss order will automatically be cancelled. This is why this bracket order is often also known as OCO order, which stands for one cancels other order. This OCO order is very common in Forex, but this order is nowadays being provided by certain equity brokers also. So I hope your broker also provides this option to you. There is obviously an advantage to using this kind of a system, because all you need to do is to be there when you are entering the trade and the system will take care of the rest. Now what happens in case neither your stop loss price nor your take profit price is hit? Well, in that case, what happens is that when you are just 10 minutes away from the closing, the broker will close your position at the prevailing price. So for example, let's say in this case, we entered a buy order at 520. Let's say neither your take profit nor your stop loss gets triggered. And let's say the prices are trading around 522 just 10 minutes before closing. Then in this case, the broker will close the position at 522. So basically, once you have entered the trade using bracket order, there is nothing else you need to do, and your broker is going to manage the entire trade from here on. Now, like you have the bracket buy order, you also have the bracket sell order. Again, in this case, let's say your trade becomes sell, you want to sell at 520 and you want to get out of the trade if the trade goes 5 points in your favor or against you. So all you need to do is mention your entry price. You have to select the number of points your target price is away from your entry price, and then you have to select the number of points your stop loss price is away from the entry price. So let's say if your entry price is 520, then placing this order will instruct the broker that your stop loss price is 525 and your take profit price is 515. With this, we have covered the various options for you to execute your trade. You might like to use one type or the other depending on what you are comfortable with. I personally prefer to use bracket order because I just need to be there at the time of placing my entry and the broker will take care of the rest. So that's all for this video, and I hope you liked it, and now you can move on to the next video.